Welcome to another episode of John McEntyre Show Live. I'm John McEntyre. Today is July the 2nd, 2024. And even though this is John McEntyre Show Live prime time, I like saying prime time, it's still hot out there. And I know I've been noticing on every live television, YouTube, anything, everyone's been talking about how hot it is. And because it is hot here in the South, it is blazing. And it was actually a little bit cooler than normal today, and it was still hot. And so, but we're gonna move on here. Uh, the routine with the show. Gonna share some wallet wins, answer our question, which is today is about manual underwriting for buying a home, and I'll cover question of the day, and then we will be on our way. Hear that? Question of the day, on our way. But what I wanted to say before we get started, yesterday was the first day of National Ice Cream Month, July, and I posted on Facebook asking the question, what is your favorite ice cream flavor? And do you have a favorite ice cream spot? And so that one's open all month. Well, all of the questions of the day is open all month, all the time, but especially that one. Chime in and share your favorite ice cream flavor and your ice cream spot. And if I happen to be in the area, I may go in and drop your name and see if I can get some free ice cream, because that's what I do. So let's get to the wallet wins. Wallet win number one: save to pay cash for our vacation and had money left over. That was serious. That was a serious wallet win. Uh, I've never came uh, in the positive, came back home in the positive. Well, yes, we have. We have before. I mean, it's not impossible. Uh, I just didn't know about it. Had I known there was extra money, I would have taken care of that. So that's what that one was all about. Wallet win number two: total. I total. Well, before I read this one was actually given to me in person. I was at the gym and I hadn't seen this guy in a while, and I thought maybe he was just working. He's working. He works a lot. Everything works for the hospital, so he's always on those different shifts and everything. So we're talking. I see a new car out there in the parking lot there, and I'm like, so that's your new? And he was like, oh yeah. After I wrecked my car, I was like, oh, you wrecked? And he has, like, his car was a classic, well, a up and coming classic car, and in a few years, I mean, they're popular as it is, but now they're beginning to really go into that classic um, qualification where the value starts to jump pretty good. And he was like, so check this out. And he showed it. He showed me everything. And he was like, see, he said, I paid 14,000 for the car. They totaled it at 29,000. And I'm like, what? And I'm not gonna say the name of the insurance company, but it was actually an insurance company that's not known for doing that. So I was like, man, it was your lucky day. That's all I can say. Because this is the first time I've ever seen this company. This is one of those. I don't want to say low end, low budget, or anything like that. They're not dishonest. It's nothing like that. It's just that they're very, like, strict. And I was saying to myself, well, we even said it. He was like, I was just as shocked as you were. He said, I almost fainted when I saw that, and he said, because I almost thought that the car could be repaired because it was convertible, and he said just something away, something happened with the top, that it would be, and the age of the car, just be better total. He said, still driving it, still able to drive it and everything, but they totaled it. And I was like, wow. So, and meant 14,000 and he got 29,000. I was like, wow. I was like, yeah. He said, so I got my wallet win. Share that one for me. And I was like, okay, I'll make sure to do that. So yeah. Wallet win number three. I just had my loan consolidation approved. So that is good. That's very good. And hopefully there's a plan behind the loan consolidation, which is to get them all consolidated so there's be one loan to focus on paying off as quickly as possible, lowering some um, interest rates, maybe some of the higher interest loans, things like that, getting them lowered. And so hopefully that's the case. So there we go. 3 good wallet wins, saved to pay cash for a vacation, had money left over, totaled my car and received more than what I paid. That was funny. That was a funny one. And just had my loan consolidation approved. So yeah. Share your wallet wins. If you're wanting to share them, we're live. Share them now. And I see them. I will read them out. I will share them and celebrate with you. If you have any questions, go to the chat, whether you're watching by Facebook Live or YouTube Live. And yep, YouTube is working. I was just making sure because it wasn't being I wasn't too certain about it at first. But yep, we're actually live on there. So go to the chat box, put your question in there, put a Q beside question. We'll see it and we'll know that it's a question. Or if it's a wallet win, hashtag wallet win, or put a hashtag or something to let us know that you're sharing a comment. And we will share it while we're here live. All right, let's get into this question. Um, the question is, I'm thinking of buying a home, and I want to know what is the process for manual underwriting for buying a home. And so, basically, question. Usually, this happens with. Um, I've seen it in real estate. I've seen it mostly jumbo loans. Loans get above a certain price range, above conventional lending parameters, but the conventional lending limits, usually million plus, 750 above, 750, 800,000 up. It goes into jumbo. So the banks are saying, hey, we're taking a large risk. We're taking a larger risk than normal, especially in certain parts of the country. Certain areas of the country, $1 million, there's a middle class house, but in some areas it's considered jumbo. And so that falls into, they go into a little manual underwriting. But in this particular case, I take this as being, you don't have, you've decided to not, to basically go what you would almost call zero credit, not trying to build a credit score. And so I'll cover both ends because manual underwriting is used in both situations. So the first one, let's just say you decided you're not going to go the credit route. You're just planning to really not focus on building a big FICO score. So the banks, they want to see something. Even though you're saying, person says they want to have a zero credit score, you're going to have somewhat of a credit score because you're going to do things out there that uses credit, you know. Um, and in this case, especially with buying a home, the bank this is a large responsibility. They want to make sure that you are a responsible borrower, and they don't want to foreclose in 3 months on you. So they have to make sure. So if you're going that route, if you can't just decide today, hey, I'm going to buy a house, and you haven't been working a certain amount of time, you haven't had anything in your name or whatever, you're not going to get a mortgage that way unless you just probably won't get a mortgage. So what they're looking for in those particular situations, you probably rent it. So they want to see a solid rental history. Um, that's a biggie because they want to know that you've been paying for where you stay. So you will keep paying. If you've paid your rent on time for 12 months, they're pretty confident that you will make your house payment for 12 months. That you're responsible in that area. Um, 12-month history of deposits and checking. That's a big one, or savings with an increasing balance. Not you're putting in 500 each month, for instance, and 500 is coming out. 500 going in, 500 coming out. They want to see that your balances are growing. on a constant basis, because that's a sign of, being responsible. You should have some utilities in your name. And this is all within pretty much 12 months. Utility, your power, your water, electricity, water, if you use gas or whatever, telephone service, they'll use that. If you've had any types of medical insurance or any types of insurance and you're making payments on them. If you're renting, that would all, and you're planning to go that route, because that is something that you should make the decision right from the start, is you're just going to go the route of pretty much zero credit. And so you have to build your reputation and integrity a different way. So if you are renting, have rental insurance and paying it on time. Because if you're paying your rent, your utilities, you have rental insurance, you're showing responsibility, then that's the same as like ratios. So they can see ratios that you're covering ratios on this side. So you should be able to cover them on this side, on the ownership side. So we cover that medical, um, outside of payroll deduction type things. So in that particular situation, you want to show trails. Basically, that's what they want to see. 12 months. They want to see at least 12 months. And that's if you're employed. There's some other things that also into, play into the manual underwriting, because normally with underwriting, a computer is making the decision. Manual underwriting, an actual person is looking at your situation. So it is sort of old school. Uh, your job title, how long you've been at your job, your education level, those things play into the decision. Okay, we have um, a, a electrical engineer or a chemical engineer, an engineering field, person, someone in the legal, someone in the financial services, those what you call stable industries in growth mode, technology, those types of industries, they carry a lot of weight, where you might not have a high income, your income is like borderline, but you're in a growth industry and you're on an upward trajectory, that counts in manual underwriting. And so those are the types of things to take into an account. Um, I did say your actual job title, you know, uh, account executive is one title, senior vice president of sales, almost the same thing, but senior vice president of sales sounds better. It looks better on an application. That's that's just what it is. I didn't make the rules. I was told this by an actual underwriter. Seeing that type of thing. So, hey, it's wordplay, but that's just the way it works. So, and you want everything to your advantage. Every little advantage helps. So that's what you want to do. So that's if you decided to go the actual what you call zero credit route. You're not planning on building a 800 credit score or whatever. Now, if it's a jumbo loan, and it goes into manual underwriting, it's all about ratios with them. Main thing is ratios, front end ratios, and the front end ratio is basically measuring your house related debts compared to your income. Then they go into the back end ratio, which is, okay, if we gave you this loan, this is what the payment would be. This is what the taxes, insurance, and all of that. And they will look at that ratio. And if both of them fits in those parameters, then you're pretty much golden. And also down payment. Down payment. I'm sorry, I missed one of the big ones. That's a big one. Down payment. Can't be a first time buyer wanting to get a mortgage and you don't have a down payment. That's saying, okay, you may be biting off more than you can chew. Usually with the jumbo loans, I've seen those in a real estate, especially business owners, self-employed people, or people with they might be employed, but they also have today we use the term side hustle. It's always been just called extra income. Those things are taken into to consideration, and cash reserves. How much money do you have in the bank? If something happened, do you have the cash reserves to cover so many months? Those are what plays into the entire process of manual underwriting. And so hopefully that answers the question. Uh, it's almost like, what would it take to qualify over here? Just, ordinary, the regular underwriting, and then thinking that same way. What does manual underwriting want to see? And I mean, what does traditional underwriting want to see now with technology? And then sort of up it a little bit more now that you're going manual, because you're actually going to talk to a human being. Normally on the other side, we're just when the computer is making the decision, the most you'll talk to is a loan officer. You'll talk to the loan officer, the person, or a mortgage broker, whoever you're working with, processor, probably a loan processor, probably the closest to the underwriter you will get, on that side. But if it goes into manual, you'll get the phone call directly from the underwriter, and actually you're going to be interviewed. They're going to have a casual conversation, and they know how to get information. Every little thing you say, they know what to do. The manual underwriters they're not newbies. They've been out there a long time. They can read tonage, your voice, how you answer a question, all of that. They know. And so you have to be confident with them when you're talking about going in this direction. And so just take that into an account. So I'm just giving you a good overview of manual underwriting. Not impossible. Happens a lot, more than what people think. A lot of people are buying houses, without the high credit scores. And let me say this: no credit score is different than low credit score. Those are two different things. No credit score means you've intentionally made a decision that you're not going to use credit. You plan to not use credit in your purchasing, any other purchases other than maybe a mortgage. You plan to use cash most of the time in your purchases. Low credit score means you're using credit, but you're not using it wisely. So those are two different things to take into consideration here. So there you go with the manual underwriting. That answers that question. Have any more questions, want to go deeper, you can contact us. We'll talk even more about it. Point you in the right direction, maybe talking to someone that specializes in manual underwriting, because they're out there. They're just a lot more of the traditional lenders than they are the manual style ones. And so you have to find a good one. That's just the extra tip there. You have to make sure you're talking to someone who really does this a lot, and they're willing to go to bat for you. Someone that's maybe a lender, or someone maybe just getting into the game, but it's really not what they want to do. It might not be a good experience. And so, you know, contact us. We'll point you in the right direction with that. All right, before I go, here's the question of the day. I was just talking about all of this with the manual underwriting, and basically they want to see how organized you are, and financial health and wellness, at the center of it is organization. So the question of the day is, do you have all of your financial documents organized in one place? Just that simple. Do you have them organized? You should anyway, whether you're going to do manual underwriting or not. You should, because if something happened, someone should be able to access all of these documents to take care of things, because that's what we've seen quite a bit are situations, someone unexpectedly pass away, accident happens, someone's in the hospital, this, and okay, do you have the insurance policy? Do you have a power of attorney? Do you have this, that, and the other? And can't get anything done because they just wasn't organized. So that's the question. You have all of your financial documents organized in one place. We have a system of organization here. We help a lot of people get organized. We probably spend, what, I don't know, 30-40% of the time helping them get organized before we can even move forward with taking care of the actual putting plans together and everything. So give us a call if you need those types of assistance, as well as any other financial assistance. And with the question of the day, being done. Remember, celebrate Ice Cream Month, National Ice Cream Month, July. I'm going to celebrate it till the end of July. Then I'm sort of going to level off the rest of the year. Celebration won't be as heavy, but I'll still be celebrating. So tune in tomorrow, same time, John McEntyre Live, prime time at 7 o'clock p.m. And until then, we'll talk.